Yes, good morning students. Welcome back to economics class. So let me brief about my last class. So in our last class, I explained about macroeconomic identities. So macroeconomic identities are nothing but important concepts with respect to national income. Okay. So under that, the first important macroeconomic identity was which we discussed. GDP, gross domestic product. So what exactly GDP, gross domestic product, shows you the market value of all goods and services produced, okay, within the country during a year. So here we want consider the earnings of NRIs, okay, that is nothing but the Indians who are working in foreign country. Okay, so their incomes are not counted, whereas the foreigners who are working in India, so their incomes are counted under GDP. Okay, so that you all already understood. So then it's about GNP. So GNP considers the aggregate value of all final goods and services produced within the country during a year, and also whatever income we have earned from outside. So it considers the income from abroad, okay, plus income from abroad. So whatever we have produced within the country and also what we received from the outside, so both will be counted under GNP, gross national product. So GNP shows you the complete national income, where it considers the aggregate value of goods and services produced within the country and also net income from abroad. So net income from abroad means what? Export minus imports. So whatever we have exported, in that we need to minus imports. So that is net income from abroad. Then it's about NNP, net national product. So what exactly net national product? So in gross national product, if you minus depreciation, so depreciation is nothing but it's the cost for repairing the capital assets like machinery, building, etc. So wear and tear of capital assets. So for that there will be a cost annually. So that should be calculated. So that is nothing but depreciation cost. So in GNP, if you minus depreciation cost, then you will get NNP. Okay. So then NNP at factor cost. So this is nothing but national income at factor level. So what exactly mean by factor level? So at factor level, so what exactly the national income? So that means without you need to minus indirect taxes. In this you need to minus. So in NNP, which you already explained. Okay, so NNP means what? GNP minus depreciation cost. So that is nothing but NNP at market price. So at market price, so that is the national income. So in that NNP at market price, we need to minus indirect taxes. So whatever indirect taxes are applied, so that should be minused. Okay, so then subsidies, whatever they have received, that should be added. So then you will get the NNP at factor level, okay, or factor cost. So factor level means at production factor level. So what is the national income? So that is called as NNP at factor cost. Then next important thing is personal income. See, personal income, it talks about the overall income received by all households. Overall income received by all households together. Okay. So here actually we need to if you want to derive your personal income, I give example of a firm. Okay, so there a firm needs to minus first undistributed profit. Okay, in their overall income, undistributed profit should be minus, and also whatever net interest to be paid, okay, by the firm, that is also should be minused. Then corporate tax, that means the firm's corporate tax which you need to pay to the government, so that also needs to be minus. Then if any transfer payments are received by the firm or an household, example I gave, okay, firm, we have taken example. If any transfer payments are received like subsidies or cash incentives, etc., okay, so that should be added. So I hope you are clear. Understand? I gave example of a firm. If firms wants to derive his personal income, okay, or if you want as a household, if you want to derive your personal income, then in your overall income you need to minus undistributed profit, and also you need to minus, okay, interest to be paid, net interest to be paid to the capital. Then you need to minus corporate tax also. Then finally you need to add one more thing, that is transfer payments like subsidies, okay, cash incentives or any prizes, okay, or pensions if you are received. So that should be added to your income. Then you will derive a personal income. So that is about personal income. Then finally, it is about personal disposable income. See, personal income is different. Personal disposable income is different. Okay, anybody has doubt in the previous session, that you can clarify now. So personal income, it shows you what is your actual income. Okay, understand? In that income, you need to minus your own personal taxes. Okay, so which you need to pay again to the government as a personal income tax. Okay, or so that are any fines, something like that, to the which you need to pay to the government. So in your personal income, if you minus in taxes, personal taxes, and also any fines to be paid to the government, so that if you minus, so whatever amount is left out with you, that is your personal disposable. That means spendable income of you. Okay, so that is personal disposable income. So these are the important macroeconomic identities which we already discussed in the previous class. Okay, so now let me go to the next important concepts, like the differences between nominal GDP and real GDP. So what exactly nominal GDP and real GDP? So let's concentrate. Okay, see, nominal GDP. GDP means what exactly? You already know very well. Gross domestic product. So nominal GDP and real GDP, real gross domestic product, real GDP. Okay, so what exactly we consider here? See, first thing is nominal GDP. Nominal GDP, see, is the income or GDP, or is the national income, which is measured at current price. Okay, current price, current prevailing or market price. Okay, so current price or present market price. So please concentrate here. Under nominal GDP, we measure the national income at current price. Current means presently what is the price of the products or services. Okay, so by taking that present period prices, national income will be measured. So that we call it as nominal GDP. Okay, nominal GDP or money national income, what we call. So money national income means presently what prices are there, or nominal national income means, or nominal GDP means presently what prices are going on in the market. So that prices are considered to measure the national income. So that is nominal GDP. Whereas real GDP, we consider some base price. Okay, so base price. So based on the base price or base year price. Base year price, national income will be measured. So what exactly base year price? So here we mainly we need to decide which are the constant prices. Constant means some year will assume as a base year. Okay, constant price means so a particular year price, say for example 2010 prices. At 2010, so what was the petrol price? An average price or rice price. Okay, services. Okay, so that average price of that particular base year prices are considered as a constant price. So that means by considering that prices for this year, we are going to measure the national income. Okay, are you clear? We consider the 2010 prices to measure this year national income. So when we measure this year national income by taking the prices of 2010, then we will come to know the actual national income. So say for example, when you in 2010 the national income was, say, let us take 10,000 crores. Example. Okay. So by considering the same prices, so based on these prices only, okay, if we measure 2020 national income, if it comes to 15,000 crores, okay, by considering the 2010 prices. So keep in your mind. So by considering 2010 prices, you measured in 2010 the national income was 10,000 crore. Example. And by considering the same prices, now we are measuring 2020 national income. Then we got the income 15,000 crore. So then we will can able to compare the actual development in the national income. So actual increase in the national income. So we can easily say, oh, 5,000 crores of national income has increased. So this is what we call it as real GDP or real national income. Okay. So whereas under nominal income, so this will not give you a clear picture. So you will not get no clear picture about the national income. Okay. So how national income has increased. So what is the extent or size of the national income increased compared to previous years? So that we cannot able to derive under nominal GDP, because we consider present prices and we measure the national income. Since the prices are keep increasing, you can't able to keep increasing and decreasing sometimes. Understand? So we can't able to derive exact national income. Whereas under real GDP, we consider base year prices or constant prices, which we call it as. Okay, so based on the constant prices when we measure the national income. So constant price for a base year, any base year. I gave example of 2010 prices we are considering. 5 years back or 10 years back prices we can consider and measure the national income present for present year. So when you measure the national income by considering that prices, then actually you will come to know the actual picture. So you will get an actual picture of the actual picture of the national income. So how the national income is increasing, whether it is increasing or decreasing. Okay, what is the percentage increase? See, all these things you will get to know under real GDP. So this is about nominal GDP and real GDP. Hope you are clear about this. Okay. So any doubts you can ask your questions in the comment box. Okay. So thank you all.